Good morning. Welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to go through our live rates and then we are going to do a deep dive into bank statement loans. Give us just a moment here to go live on all of the different platforms that we stream on. So give us just a second here to get up and running everywhere. We got the chat up on the screen. Go ahead and feel free to drop a comment there in the chat. Great topic here today. The most popular non-QM loan, which is something we're very familiar with here at the Mortgage Calculator. So great topic here for today, something that is definitely used on a daily basis. And it looks like we're live on all the platforms, so we'll go ahead and get started. What we'll do is we'll take the chat off the screen for now, but go ahead and keep dropping your comments there in the chat. You can drop any questions you have in the chat as well, and we'll be happy to answer them after we go through our deep dive. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president Nick Hershey and our sales manager Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every morning at 11 a.m. Eastern on this show is pull up our actual mortgage rates to check out our rates for different programs for today, and then we do a deep dive into a different loan type. And today's loan type, something we're very familiar with here at the Mortgage Calculator because we specialize in non-QM loans, and this is the most popular non-QM loan, our bank statement loans. So Jose will take us into some different banking options, but before we just check out the rates. So Nick, if you are ready, let's go ahead and pull up our rates today and see what they are looking like.
All right, thank you. So for today, as we do every day, we'll compare the rates. It is July 23rd, just after 11 a.m. So our standard programs have their initial rates issued. Not much change since yesterday, but we will compare the APR across the program by setting up a standard scenario. If you'd like a full breakdown of all the itemized fees that go into the APR, please get with our team members to get a loan estimate. We have over 300 loan officers to help you out. For the demo, as we do every day, we'll set up a standard scenario, a standard single family home, 500,000 purchase price, a 400,000 loan amount that corresponds to 80% loan to value, 20% down payment. We use an estimated 760 FICO credit score, and estimated 40% debt to us. So let me share my screen and we'll see the rates for today. So first option, we always go over the standard option that most people think of when they think of a mortgage, 30-year fixed conventional loan for a primary home. Rates as low as 6.49 today, final APR 6.79, right about the same as it was yesterday. Now, if for any reason our customer doesn't qualify for conventional, we'll typically present an FHA option. FHA allows more leniency on credit issues as well as a higher debt to income ratio overall, but does require upfront and yearly mortgage insurance. Rates today come in at 5.5. Final APR with all of the fees included, 6.477. So if our customer qualifies for both, FHA could be a touch cheaper if they're willing to do that yearly mortgage insurance. And our customers that need to use FHA, definitely a very good option today, as it is quite a bit less today, actually. Now for our customers that qualify for VA, that's only for our eligible vets and active service members. If you are eligible, VA programs are 7.5 today. Final APR with any funding fees included, 6.067. And if we compare that to FHA, it's going to be a better option, as well as a better option than conventional. So any of our eligible vets and active service members, definitely use your eligibility for those VA programs. And the final option for standard loan programs for agency government options is the USDA option. USDA is only for properties in the rural areas, the USDA eligible areas. If the customer and property does qualify, it's a good option to consider. Rates today coming in at 5.75, final APR at 6.488. Usually it's a touch cheaper than FHA. Should probably go down a little bit today, but right now they're about the same. So our customers will compare that. And comparing it to conventional, USDA is going to be a much better option. So definitely a good option for those customers looking in those areas. And the next option is an option that we have. We're going to go over today as well. But these first four, any other banks or lenders may have. But if the customer doesn't qualify for a standard agency or government option, they may have to deny that customer. That's where we love to start presenting our additional options. First up is our non-QM alt doc option for a primary. So if our customer can't use standard tax returns, full doc income, needs to use alternative docs, we can switch to our alt doc version here. This is probably a bank statement or similar. Jose will show you all the different options we have here in a second for bank statement. Rates today come in at 6.875, final APR 7.196. So as usual, within a half a point of the conventional option to switch to our alt doc option. So great alternative for our customers that would otherwise be denied to use our alt doc options. And Jose will show up. Moving on to our investment property options. Tons of flexibility for investment properties under non-QM. First up are standard alt doc options, such as bank statement, 1099, and similar. This is most likely a bank statement option, coming in at 7.25 this morning. Final APR 7.568. And we'll compare that to the other investment property options. So there are no government options, so no USDA, FHA, or VA, but we do have our conventional options. So 30-year fixed conventional for an investment property. Today comes in at 7.125, final APR 7.482, which is a touch cheaper than our alt doc option. So touch cheaper than bank statement option. So customers may want to consider that. But we always recommend for our investors to check out our favorite programs, the DSCR. DSCR stands for debt service coverage ratio. We had a detailed episode yesterday on that. No income or employment used, just the estimated rental income from the appraisal. We use that and compare that to the estimated expenses, aka if the property cash flows, that's a ratio of 1 or higher, positive cash flow, which is preferred. We use a ratio of 1.5 for all of these demos here. The first option here is a 3-year prepayment penalty, which is pretty standard for DSCR. So a standard DSCR program comes in, 6.75. Final APR 7.067, which smokes conventional. Absolutely amazing. And we can sweeten the deal with some of our programs and add a 5-year prepayment penalty. Rates as low as 6.375, final APR 6.707, which really improves from conventional. And the final option here for DSCR, there are options for no prepay because some states do not allow it and some customers don't want it. That's not a problem. No prepay comes in at 7.25 rate, final APR 7.608. So just a touch higher than conventional to have no prepay. Usually recommend our customers to still a preferred option. Most investors DSCR to a conventional any day. And the final options here, second mortgage is very popular request these days as many customers have record equity but don't want to touch that first mortgage. So for a primary homeowner that needs to get cash out still but doesn't want to touch their first mortgage, their options are typically a HELOC or one of these new options, 30-year fixed second mortgage primary with non-QM income. So we can use bank statements and similar. Rates today come in at 8.125, final APR 8.305. And the same program for an investment property. HELOCs are very rare for investment properties, so this is a very good option for investors that have a good first mortgage, good low rate first mortgage. Can get cash out with a second mortgage, rates as low as 9.875, final APR 10.124, which is going to be better than a HELOC anyway, and they're very difficult to find for investment properties. So those are our typical options we review every day. But let's get into our deep dive, which is going to be bank statement loans. So every day we present typically a bank statement option there for the non-QM. That's the most common non-QM, as Kyle explained earlier. So that's typically the cheapest option you see pop up there in our plethora of thousands of programs within the non-QM. But since bank statements is the most popular, this is probably the one we discuss the most. And Jose will go over some specific ways we can use this and exactly how to set this up, as it is used commonly for a lot of different customers there. So you ready, Jose?
Absolutely. Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Bank statement loans along with DSCR loans are probably our favorite loans to originate because it's an amazing feeling when you turn those frowns upside down, right? You got the borrower that thinks all he makes is $3,000 a month based on his tax returns, may have never heard of bank statement loans. And then you ask them to review his business bank statements, and all of a sudden their income is $30,000 a month. And with only 10% down, assuming they have the minimum credit score, they can qualify and close on their dream home. Amazing, right? Another amazing thing you can do with the bank statement loan is get multiple income streams qualified. We had this happen just the other day. MLO comes into the support room, has a borrower that another lender had denied because, not through the mortgage calculator, of course, because they were trying to get them approved full doc, but we were able to get that borrower approved with the main borrower on bank statement and the co-borrower on W-2s, which was the best of both worlds, and probably like 1.5 points lower cost. This was for an investment property purchase. You know how steep those loan level price adjustments are on agency loans when it's an investment or second home. So this 80% LTV bank statement and W-2 purchase was at a lower interest rate and about 1.5 points lower cost than the full doc agency loan. So with all of that great news, let's get right into it here so I can share all the great examples that I have for you. Our first example here is the standard 90% max LTV purchase with a premium credit score. Never any mortgage insurance applicable on any of these bank statement loans. So you're looking at 8.625 being our lowest cost option at par. And you can buy that down to 7.75 for this primary purchase, 10% down at a cost of 2.35 points. Our next example is with 15% down. 10% is the minimum down payment. 15% down is a little bit more standard for these primary bank statement purchases, and you see that reflected in the rate. 8% is now offering a lender credit of 0.025 points, and you can buy that down all the way to 7.25% at a cost of 2.35 points. Primary purchase now with our down payment, and again you see the rate and cost keep dropping. Now we're at 7.375 with a lender credit of 0.025, and you can buy that down all the way to 6.75% at a cost of 2.475 points. And now for our low credit score option, 600 is our low credit score for a bank statement option. And on a primary purchase, great news, we can still attain 80% loan to value, only 20% down for your bank statement option with only a 600 credit score. And we have 11.125 is our lowest cost option at par, and you can buy that down to 9.999 at a cost of 2.475 points. This is for a low credit score purchase with a 600. And our investment options here, maximum LTV 85%, minimum down payment 15% for our investment property purchase. 8.749 is our lowest cost option at par, and you can 0.249 at a cost of 3.225 points for our investment purchase, 15% down. And now our investment purchase with the more standard 20% down, you see that rate drops precipitously. Now we have 7.375 with a lender credit, and you can buy that down to 7%. Pretty amazing. And our low credit score option again, 80% LTV, only 20% down is possible with that 600 credit score. And our lowest cost option is 11.125, which is at par. And you can buy that down all the way to 9.499 at a cost of 3.475 points for investment with a purchase with a 600 credit score at an 80%. So now we have refinance, our low credit score refi with a 600 credit score, again, maximum LTV of 75% with a 600 credit score. 11.499 is our lowest cost option at a cost of half a point, and you can buy that down to 10.625 at a cost of 2.475 points. And now our standard primary refi with standard credit, 85 LTV moment, 9.125 is our lowest cost option at a cost of 0.75. And you can buy that down all the way to 8.625 at a cost of 2.25 points. And now for our last option, I wanted to show you that at the mortgage calculator, we can also originate those high dollar loans. Here we have an example, 80% LTV purchase, $3.5 million purchase, $2.8 million loan, bank statement, and look at those rates. 7.75% is at par, 7% lowest cost option for your $2.8 million, 80% LTV bank statement primary purchase. So definitely look to the mortgage calculator for your bank statement loans as well as DSCR, non-QM, and agency.
Oh, whoops, sorry, I was muted there. Thank you, Jose. I don't see any questions coming up in the but popular programs here, and definitely something that all borrowers and loan officers should be aware of. But we'll go ahead and wrap it up since there's no questions. Remember, we do this at 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different loan type. So we will see you all with a new loan type here tomorrow.